So here we go. Okay. Namaste friends. Good morning. Suprabhat. Suswagatam to Wealth Talks. I'm sure all of you remember what Warren Buffett has said about successful people. He has said the difference between successful people and really successful people is that really successful people say no to almost everything. So when I approached these gentlemen, these three really successful wealth creators, the thought was at the back of my mind. And when they said yes, almost immediately, I was pleasantly surprised. But to quote Warren again, life is full of probabilities. There are no certainties. So we are going to have a great conversation with all these three stalwarts. They are going to share with us their wealth wisdom, their experience, stories, and ideas. Stories are important because facts are forgotten, but stories are remembered for a very long time. And ideas, well, they outlive people. आप लोगों ने सुना ही होगा कि जो थियरी है डिसरप्टिव इनोवेशन, इट वाज रिटन बाय प्रोफेसर ऑफ हार्वर्ड बिजनेस स्कूल जिनका नाम क्लेटन क्रिस्टनसन। ये थियरी 25 साल पहले लिखी गई, लेकिन इवन टुडे इट इज रेलेवेंट। It is relevant today, it was relevant yesterday, and it will be relevant for many tomorrows to come. तो चलिए करते हैं धन की बात दिग्गज धनवानों के साथ। तो पहले होगा पात्र परिचय, क्योंकि हमारा ये शो है तो पहले शो टाइटल्स होंगे। तो अनूप जी जरा वो वीडियो चलाइए, वीडियो नंबर 1। उम्मीद है आप सब लोगों को ये छोटा सा वीडियो पसंद आया होगा। तो मैं शुक्रगुजार हूँ नैटिक क्यूरियो, एक बुटीक एजेंसी है जिन्होंने ना कि ये वीडियो बनाया है, लेकिन पूरी जो डिजिटल कैंपेन है लोगो क्रिएशन के साथ वो उन्होंने बनाई है। सो स्पेशल थैंक यू टू विशाल ठक्कर एंड हिज वाइफ नम्रता। मैं शुक्रगुजार हूँ आशीष पेठे और सारी जीजेसी टीम का, जिनके सहयोग बिना आज का ये प्रोग्राम जो जिस तरीके से हो रहा है, जो पैमाने पे हो रहा है, वो शायद नहीं होता। अब मैं आप सब लोगों का शुक्रिया अदा करना चाहता हूँ, क्योंकि हमने रजिस्ट्रेशंस जो देखे, जो फेरिस देखी, तो 1000 लोगों से ज्यादा लोग रजिस्टर कर चुके हैं और 60 से ज्यादा सवाल आए। तो उन 60 सवालों में से 10 सवाल लकी ड्रॉ के बेसिस पे हकदार होंगे जॉयज ऑफ कंपाउंडिंग की कॉपी आप सबको दी जाएगी। लेकिन मैं आपको कहता हूं कि सारे सवालों के जवाब दिए जाएंगे। कुछ सवालों के जवाब आज यहाँ पर दिए जाएंगे और बाकी सारे सवालों के जवाब आपको ईमेल द्वारा दिए। सो मूविंग ऑन, अभी ये हमारे सारे जो दिग्गज धनवान लोग हैं, ऑल वेल्दी पीपल, वेल्थ क्रिएटर्स, इनके बारे में मैं कुछ कहना चाहता हूँ। और सबका इंडिविजुअल इंट्रोडक्शन तो आप देख ही चुके हैं, मैंने कुछ पैटर्न रिकॉग्निशन किया है, क्योंकि आप तो जानते ही हैं कि इन्वेस्टिंग इज ऑल अबाउट पैटर्न रिकॉग्निशन। तो मैं अपना सोशल कैपिटल बढ़ाना चाहता हूँ, इनके साथ रिश्ता जोड़ना चाहता हूँ, तो मेरा धन वही है। सो लेट मी शेयर दोज पैटर्न्स विथ यू। देयर आर 7 of them. Number 1, all my panelists are corporate professionals. They are MBAs. And most interestingly, everybody is educated in Ahmedabad. आशीष चौहान जी हैं जिन्होंने स्कूलिंग करी है अहमदाबाद में। वेंकट जी ने IIM अहमदाबाद से MBA किया है, और गौतम जी निर्मा यूनिवर्सिटी से MBA फिनांस है। और तीसरी बात, इनके सबके पास एक एक एडिशनल क्वालिफिकेशन। गौतम जी मारवाड़ी हैं, आशीष चौहान जी गुजराती हैं, और वेंकट जी ही बिलोंग्स टू द टाटा फैमिली। 31 साल से टाइटन में है, और आपको तो पता ही है कि वेल्थ क्रिएशन इन तीनों ने जो किया है, आई थिंक दिस इज द वन ऑफ द बेस्ट पैनल्स वी कैन हैव। और सबसे अहम बात, ये सारे जो लोग हैं, ये तीनों जो दिग्गज हमारे साथ जो मौजूद हैं, they firmly believe in long-term value creation. So they have created value for their clients, for their companies, for themselves, of course, and for the community at large. They have built brands, they have built strong teams, intellectual property, you name it, and they have done it. तो ज्यादा कुछ ना कहते हुए मैं एक चीज आपसे खास कहना चाहता हूँ कि जो वेंकट जी हैं और आशीष जी हैं, उनके बारे में ये कह सकता हूँ कि कॉर्पोरेट योगी हैं, कॉर्पोरेट एसेटिक्स हैं, क्योंकि इतना उनका व्यस्त शेड्यूल होता है, फिर भी वो अच्छे काम के लिए समय निकाल ही लेते हैं। और उनका लीडरशिप स्टाइल है अटैच्ड येट डिटैच्ड। तो आई थिंक ये एक बहुत रेयर क्वालिटी है। और लास्ट बट नॉट द लीस्ट, individual social responsibility is a way of life for all my panelists today. Venkat sir, he has been donating half of his salary to charity, जैसे नन्ही कली है, और for the girl child, I think he has adopted a school in Ratlam where he keeps on going. आशीष चौहान जी की बात अगर की जाए, so he is associated with lot of NGOs, और वो अपना कीमती समय शिक्षा प्रदान करने में, he goes to universities and colleges not just in India but in the UK and US, and time is money. और गौतम जी के बारे में क्या कहूँ, उनके करियर की तो अभी शुरुआत है। तो उन्होंने फर्स्ट टाइम when he made $1 million, he donated to a charity foundation which is run by the legendary investor Monish Pabrai. उसका नाम है दक्षिणा फाउंडेशन। तो हम में से कितने लोग ये सब कर पाते? तो ये हो गई हमारे पैनलिस्ट की बात। तो जहां तक मेरा सवाल है, आई एम नॉट एन एक्सपर्ट इन वेल्थ क्रिएशन, मैं तो एक विद्यार्थी हूँ, सीख रहा हूँ। बट when I started learning, I quickly realized I had always associated candles with celebrations. But I realized and I discovered that there is money to be made by watching candles. I mean, candlestick patterns. Okay. So celebration से मुझे याद आया, we have two occasions, two reasons to celebrate. और वो celebrations के लिए मैं अभी बुलाना चाहूँगा आशीष पेठे जी का, the chairman of GJC and the partner of Vaman Hari Pethe Sons Jewelers. लेकिन before he starts talking to you, मुझे एक चीज कहनी है। ये दो आशीष है हमारे साथ। तो आशीष का मतलब होता है blessings, and we are doubly blessed, you know. और जब भी आशीष पेठे की बात होती है, तो first thing which comes to my mind, आपला माणूस, आशीष चौहान के बारे में आपड़ो मानस छे। तो जो भी इनके संपर्क में आता है, सबको लगता है अरे ये तो अपने आप। So with these thoughts, Ashish Pethe sir, please आप हमसे बात कीजिए और सेलिब्रेशंस की शुरुआत करते हैं.
Can you hear me, Anil ji?
Yes, sir. Please.
Good morning, everyone. Namaskar, Suprabhat. On behalf of GJC, All India Gem and Jewelry Domestic Council, it gives me a great pleasure to welcome you all to this lovely platform that Anil ji has created, that is Wealth Talks. I am personally connected with Anil ji for last many years, and I have seen the great work that he has been doing. So I'm happy to connect with you, Anilji. And when he told me that just a minute, when he told me that he has such a wonderful panel, so we grabbed the opportunity with both our hands and said yes, we would definitely partner with you and promote this thing. And the topic also is very interesting and very relevant during current times. The times are really uncertain, and we all need to protect and create wealth for all our industries, economy, as well as everyone as a person. And today I have Anilji has given me pleasant task of celebrating the release of not just one but two books of our panelists today. And the first one that I have today is Joys of Compounding by, do you see this? Yes, by
Yes, we
Gautam
can see
Pai.
that. Yeah.
Yes, yes. And it is already a bestseller. And I think, if I mistake not, already 15,000 copies have been sold in India in last few months only. So it's a super successful bestseller. Congratulations, Gautamji. Millennials have been a subject of research and debate for all over the world for many years now. And today's youth prefers a fast life and are also, known as the here and now generation. They are only concerned about the now. So it was a pleasant surprise to note that Gautamji, a millennial himself, espouses delayed gratification. We would like to hear more from you, Gautamji. And once again, congratulations to you. Wish you all the best. Keep writing, uh, creating wealth, and inspiring all of us to create more wealth. And the second pleasant task that I have is also about our second panelist, Ashish Chauhanji, and his book, Sthita Prajna. These are his memoirs, and they were just released a couple of months back. Congratulations, Ashish ji. It's great to read about your story. Everyone knows about Ashish Bhai is the MD and CEO of BSE Limited, and he himself is a multifaceted personality, and I think he's considered the father of derivatives in India. And he leads a stock exchange that has become the fastest stock exchange in the world with I think speed of 6 microseconds. So it's a great journey, Ashish Bhai, and his memoirs are available in English, Hindi, and Gujarati. And thankfully now I think a Marathi edition is also going to be published soon. Sthita Prajna traces, a journey of a small-town boy who started his career with IDBI with a modest salary of 3,000, and now we have seen what an institution has been created, and that institution is called the Temple of Wealth nowadays. And the market capitalization of all companies listed on BSE has recently crossed $3 million. So sorry, $3 trillion.
3 trillion.
So
Yeah.
congratulations, Ashish Bhai. Keep rocking and inspiring all of us. And what can I say of CK Venkat sir, MD of Titan Company, is fondly known as CKV in the jewelry circles, and he's a role model for all in the industry, and he has been an inspiration to all of us in the gems and jewelry industry. And I know he is he has been helping in social causes, and and interestingly, CK sir, I also started my career in Tata way back 30 years back. So, and this Titan is now one of the most valuable companies in the industry. So we would, all of us are, eagerly looking forward to hearing your views about how to, value invest and how to create wealth that you have so fabulously done. And as we have been talking on books, books are really a great source of learning. Knowledge is power, as they say. And so I would also recommend everyone to read a book on Titan company. I think that was released in 2018. So I will not take much more of your time. So I welcome you all and thank you the panelists for joining today, and especially thank Anil ji for partnering with us in this wonderful session that you have. Namaste. Have a great weekend. Thank you.
Thank you, sir. I am really honored that you have reposed your faith in me, and our relationship on a personal and professional basis is going to continue for years to come.
Definitely.
तो अभी किताबों की जब बात निकली है, तो चलो थोड़ा सा माहौल शायराना करते हैं. मेरे पास एक छोटा सा वीडियो है 30 सेकंड्स का, तो अनूप को मैं रिक्वेस्ट करता हूं वो वीडियो जरा चलाना.
किताबें झांकती हैं बंद अलमारी के शीशों से, बड़ी हसरत से तकती हैं. किताबें झांकती हैं बंद अलमारी के शीशों से, बड़ी हसरत से तकती हैं. महीनों अब मुलाकातें नहीं होती. जो शामें उनकी सोबत में कटा करती थी अब अक्सर गुजर जाती हैं कंप्यूटर के पर्दों पर. बड़ी बेचैन रहती हैं किताबें, उन्हें अब नींद में चलने की आदत हो गई है. बड़ी बेचैन रहती हैं किताबें, उन्हें अब नींद में चलने की आदत हो गई है.
थैंक यू अनूप. ये वीडियो एक्चुअली 2 मिनट का है, लेकिन आप इत्मीनान से जब आपको समय मिले आप सुनिएगा. बहुत उम्दा कविता है. तो कहने का मतलब क्या है दोस्तों, कि चाहे कंप्यूटर के पर्दे पर ही क्यों ना हो, किताबें जरूर पढ़िए. रिमेंबर, वॉरेन बफे रीड्स 500 पेजेस पर डे. मैं तो 100 पे अटका हूँ अभी तक. तो चलिए आगे बढ़ते हैं. तो हमारे जो पहले मेहमान है सीके वेंकट साहब, उनको मैं बुलाता हूँ, उनके साथ गुफ्तगू करते हैं. गुड मॉर्निंग वेंकट सर.
Good morning, Anil. You can hear me?
Yes, I can hear you, sir, perfectly. Sir, everybody knows that health is wealth for you. You know, you are a role model because you have to cycle to work and back. So, and I recently read in an interview that most of us have gained weight during the lockdown, but you have lost 8 kg. So while health is wealth, on a holistic level, how do you look at wealth? If you can take us through your thoughts, that is number one. And the second aspect I am requesting you to cover in your opening remarks is, there is a question to that effect from Manjunath KB, one of our viewers. It's about pursuit of knowledge. All of us lead so busy lives that even if you want, you are unable to dedicate time every day for learning. So how do you keep on learning and be relevant? That's the thing which we would like to hear from you. So welcome. Over to you, sir. CKV.
Thank you. Morning, Anil, Ashish and Gautam. And thank you, Anil and Ashish Peteji for those kind words about me. It's wonderful to be here today. And I'd like to talk about my perspectives on wealth to start with. And I would like to start with how each of us defines ourselves and what is the role of our main profession through which we earn whatever we earn. You know, whether we are an executive like some of us on the panel, or an entrepreneur, or an actor. So what we are in our life, what multiple dimensions do we have which actually define us? So are we simply defined by this economic role of an executive or an entrepreneur or an actor? Or are we more than that? Are we also a passionate weekend cook? Are we also a loving son who calls his parents every day? Are we a singer who gets a lot of energy by doing riyaz every time she or he gets a chance to do that? And I think the more personas that we create for ourselves, by which we are defined in our own mind first and by the outside world, I think this I have found to be a very important aspect on the basis of which income and wealth start making only that much sense that they should in your life. And through this, how important is that bigger bungalow, the second bungalow, the fancier holiday, the larger car, the Ivy League admission for your children, and all this sort of get sorted out, and you start understanding what really gives you your joy every day, your happiness in a longer time frame. The roadside chaatwala or the five-star brunch, the business class air travel on Emirates, or the wind in your face while traveling by Gujarat Mail to Ahmedabad from Mumbai. So someone said that the most joyous things in the world are actually free. And I've personally found that if you think about this, if you define your persona by many things and not just by the main thing, which is the executive, the entrepreneur, or this actor, or the artist, or whatever, or the writer, or whatever you are, if you sort those out and you become many things to yourself and to others, that's a very important way to define what income and wealth mean to you. And you actually end up reducing the role of income and wealth in your life, and that starts showing in the way you create wealth through your company or for others or whichever way. So it would be great to think about all these and set them firmly in your head. So that's point number one. So with the role of personal wealth sorted out like this, it's perhaps easy to conceive a fairer world in the world of business also, of inclusive growth, of a just distribution of prosperity, of multiple stakeholder focus. And to borrow a phrase from Anil a little earlier in the time, agar Gujarati mein baat karun to sare, what was that? I'm sorry, I've forgotten that phrase that you used, Anil, but you know, the multiple stakeholder focus is actually about creating more wealth for everyone and not just about creating or distributing the wealth fairly. We believe at Titan that employees, franchisees, and the vendor partners, when treated completely fairly, end up maximizing what they do for the company, what they do for the shareholders. So it's not just about a fairer distribution of wealth, but it's more a holistic thinking about maximizing stakeholder value. And if you start putting employees, distributors, franchisees, communities, the environment, the government, in a way, even before shareholders, all these sort of come together and actually maximizing shareholder value. And that's what we have believed from way back in 1987 when the company started, and that's what we continue believing. And therefore, this is what we have actually experienced in very vivid terms during even the COVID challenge. Now, going back to that specific question asked by the person about learning, I think if we don't stay in those ivory towers that some of us perhaps create for ourselves, and if we take the effort to be part of the world, be immersed in the world, travel in the Mumbai local as opposed to travel inside that air-conditioned bubble of our cars, go to the smallest of towns and mingle with those store owners, in my case, for instance, the employees of stores, meet those customers, put yourself in the spot, and of course, also read as much as you can, but not, generally, but in a little more selectively. For example, one of the most powerful books that I read 2 months back was a book called Winners Take All by Anand Giridharadas, because that is a subject very close to my heart. It's all about multiple stakeholder focus. It's all about the values that the Tata Group believes in, how companies exist actually to share their prosperity with the larger world. And therefore, selectively choosing things to learn is how I keep my own learning on top. Thank you, Anil. I'll stop here.
Awesome. I just have to add one bit here, and by doing so, I'm also promoting a fraternity of consultants. See, when I was reading this wonderful book, I think it is on Titan by my friend Vinay Kamath. One thing which has stayed with me is the role of a consultant. You can add at an organization level, you can learn so many things. Now, there is a specific example of an input which was given by McKinsey, Irina Vittel. So, as everybody knows that Tanishq was about to be closed down. And so Titan top management was very committed to the idea that it should be continued. But the Tata Sons board, some people were not really interested in continuing the business. So when the management gave a presentation to McKinsey, they saw a point and they said, yes, this project has a potential. Only thing is, Titan till now is a product company, because they were mainly into watches. You should look at the business as a retailer. I think that is a fantastic input. And I think that has made so much of difference to ये छोटा मुंह बड़ी बात है सर तो अभी आशीष जी के तरफ पढ़ते हैं आशीष भाई केम छो हेलो
नमस्कार सर नमस्कार हाँ नमस्कार
નમસ્કાર તો તમને હું શું કહેવા માંગુ છું કે હું પણ અમદાવાદમાં ભણેલો છું so I have done my schooling at two places. One is Hebron school in Maninagar and the second school is St. Xavier's Mirzapur. So that's where I picked up Gujarati and I have been blessed with friendships of so many people. So આપણે શું છે કે when it comes to investment, something which has caught the fancy of the youngsters in a big way. And cryptocurrency जैसे Ethereum है या फिर Bitcoin है. तो जैसे वेंकट जी ने बोला wealth के बारे में, so do you consider investing in these cryptocurrencies as well? ये एक नंबर है, नंबर 1 पॉइंट है, क्योंकि recently Coinbase नाम की कंपनी जो क्रिप्टो करेंसी का एक प्लेटफॉर्म है, it has been listed on Nasdaq. तो ये एक सवाल आपसे है और दूसरा कंपाउंडिंग के बारे में, क्योंकि जब मैं आपसे बात कर रहा था तो आपके कंपाउंडिंग के बारे में जो सिद्धांत और प्रिंसिपल्स है वो मुझे बहुत अच्छे थे. तो आपने ओपनिंग रिमार्क्स में ये दो चीजों को जरा प्लीज हमसे शेयर कीजिए. ओवर टू यू आशीष जी.
धन्यवाद अनिल जी, आशीष पेठे जी, वेंकटरमणन जी. इट्स अ प्लेजर टू बी इन फ्रंट ऑफ यू. तो ये जो कंपाउंडिंग नाम की चीज है इतनी इंपॉर्टेंट है बिकॉज जितने लोगों ने पैसे बनाए हैं, मैंने उतने पैसे नहीं बनाए, लोगों को लगता है मैंने बनाया, लेकिन मेरा जो रोल है स्टॉक मार्केट में अंपायर का है. तो अंपायर का और स्टेडियम प्रोवाइडर का है. लेकिन जो खेलने वाले हैं सचिन तेंदुलकर वगैरह, विराट कोहली, वो लोग पैसे बनाते हैं. हम लोग सिर्फ आउट नॉट आउट देते हैं, वो भी पूछा जाए तो कई बार कौन सी पिच अच्छी होती है उसके ऊपर आप बात कर सकते हैं थोड़ा सा. कौन से प्लेयर अच्छा खेलते हैं देख देख के पता चलता है, लेकिन कल क्या होगा किसको पता नहीं है. और जो भी पैसे बनाते हैं, स्वाभाविक है कि अमिताभ बच्चन के नाम पे कई लाखों लोग मुंबई में आए कि भी हम भी कलाकार बनेंगे और 10 करोड़ रुपया एक पिक्चर का कमाएंगे. तो उसमें से एक ही अमिताभ बच्चन बना, बाद में बाकी सब एक्स्ट्रा बन जाते हैं. तो मेरी आप सभी से रिक्वेस्ट है कि ये जो सर्वाइवर बायस कहते हैं इकोनॉमिक्स के, इसको कि जो बड़ा दिखता है उसको हम अनुसरण करते हैं, हम वी ट्राई टू फॉलो देम। जरूरी नहीं है कि हम उनके जैसे बने, लेकिन अच्छे लोगों का अनुसरण करने से अच्छा ही होता है, ऐसा मेरा मानना है। इसलिए अनुसरण भी करना चाहिए, लेकिन अपना दिमाग लगा के करेंगे तो शायद उनसे भी बेहतर बन सकते हैं। तो ये जो गौतम बैद जी की जो किताब है जॉयज ऑफ कंपाउंडिंग, मुझे इसलिए अच्छी लगी कि उसमें उन्होंने बेसिकली वॉरेन बफे, चार्ल्स मुंगेर और ऐसे कई लोगों के बारे में, उनकी जीवन के जो नियम है उसके बारे में बात करी है। और कंपाउंडिंग एक एज इफ आज सामान्य वर्ड बन गया है कि कंपाउंडिंग, लेकिन हम उसको अच्छी तरह से जानते नहीं है कि कंपाउंडिंग क्या है। कि आप 10% का इंटरेस्ट करते हो हर साल का, 10% का ब्याज लगाते हो, तो 10 साल में कितना होना चाहिए? सिंपल जो कहते हैं हम लोग लिनियर, तो 10 साल में उसका 100 रुपए का और 100 रुपया जुड़ना चाहिए, लेकिन कंपाउंडिंग में उससे अधिक हो जाता है। तो वो जो जैसे 30, 40 साल, 50 साल तक जाओगे तो और अधिक हो जाता है, तो उसी का कंसेप्ट कंपाउंडिंग है। लेकिन जो मेरा मानना है कि आपको जो कंपाउंडिंग जो लोग कहते हैं, उसमें कई तरह के इश्यूज और कई तरह के पहलू होते हैं। तो ये पूरी जो एरिया है जिसमें चीज बहुत तेजी से बढ़ती है या घटती है, थिंग्स बिकम वेरी लार्ज इन अ शॉर्ट टाइम और वेरी स्मॉल इन शॉर्ट टाइम, आई कॉल नॉन लिनियरिटी। नॉन लिनियरिटी एक और उसके अंदर कंपाउंडिंग एक छोटा सा भाग है। कंपाउंडिंग जो है वो नॉन लिनियरिटी का छोटा सा भाग है। जैसे आपको नॉन लिनियरिटी किस किस में मिलती है? कंपाउंडिंग में तो ऑफकोर्स मिलती है, सीधी सीधी नहीं चलती है, थोड़ा ऊपर चलती है, थोड़ा नीचे चलती है। लेकिन लॉटरी टिकट है, वो भी एक नॉन लिनियरिटी है कि आपने 10 रुपया डाला, आपको 1 लाख रुपया मिल सकता है। इंश्योरेंस है, वो भी नॉन लिनियरिटी है। आपने कभी फ्यूचर्स ऑप्शंस वगैरह की बात करी होगी, कभी ट्रेड किया होगा, तो आप 10 रुपए का ऑप्शन खरीदते हो, आपको 1000 रुपया भी मिल सकता है, 10 रुपया जा भी सकता है। तो दीज आर ऑल नॉन लिनियर पार्ट ऑफ इट। दूसरी जो चीज है एक्सपोनेंशियल, वो भी नॉन लिनियर होती है। 1 का 2, 2 का 4, 4 का 8, 8 का 16, वो भी नॉन लिनियर है। और स्क्वायर होता है, 1 का 2, 2 का 4, 4 का 16, 16 का स्क्वायर करते जाओ, तो ऐसे बढ़ते बढ़ते कितना जल्दी आगे बढ़ जाता है। तो कई उसके उदाहरण भी भारत में भी मिले हैं और उसके एग्जांपल्स भारत में भी मिले, जो हम भारत के नॉर्मली उदाहरण यूज करते नहीं है, क्योंकि अंग्रेजी किताबों में सिर्फ ग्रीक और लेटिन वगैरह एग्जांपल देते हैं, या अमेरिकन एग्जांपल देते हैं, यूरोप के एग्जांपल देते हैं। एक इंडियन सॉर्ट ऑफ इंडियन स्टोरी है कि राजा ने कहा कि फार्मर को कि आप जो चाहिए मैं आपको दूंगा। तो किसान ने कहा कि ऐसा करते, चेस खेलते हैं और हर एक जो खाना है, 64 खाने होते हैं, तो उसमें आप बेसिकली स्क्वायर पे करते जाओ, तो 1 का 2, 2 का 4, 4 का 16 ऐसे करते जाओ, तो 64 पे में दुनिया में जितना धान है, जितना राइस है, उससे 100 गुना राइस आपको देना पड़ेगा। तो ये जो चीजें भारत में बड़ी आत्मसात है, ये जो कंपाउंडिंग कहते हो, नॉन लिनियरिटी कहते हो, एक्सपोनेंशियलिटी कहते हो, तरह तरह की चीजें होते हैं, बट अलग 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 रूप में आती है अपने सामने। और कंपाउंडिंग जो ऐसी चीज है कि बहुत कम बढ़ती है कंपेयर टू एक्सपोनेंशियल, इसलिए हम उसको भूल जाते हैं कि कंपाउंडिंग में इतना पावर है कि आप सोच नहीं सकते। जो चीज जैसे सेंसेक्स की मैं बात करूं, 1979 में सेंसेक्स 100 था, आज करीब 51,000 है। और उसमें आप डिविडेंड जोड़ देते हो, हर साल कंपनियां डिविडेंड भी देती है, वो डिविडेंड जोड़ते हैं, तो आज सेंसेक्स 70,000 होता था। तो 100 का 70,000 करीब करीब 42 ईयर्स, 42 साल में हुआ है। 700 गुना रिटर्न्स कोई एसेट क्लास में नहीं हुआ, क्योंकि वो जो एसेट क्लास है स्टॉक मार्केट, जिसमें प्रोडक्टिव कंपनी जैसे टाइटन है और कई सारी कंपनियां जो लिस्टेड है, तो वो जो आपको रिटर्न्स दे सकती है, वो बहुत जब ओवर 30, 40, 50 ईयर्स देखते हो तो बहुत ज्यादा बन जाता। तो उसके लिए धैर्य की जरूरत है। हम लोग सभी अपने आप को इन्वेस्टर बोलते हैं, लेकिन वो हम इन्वेस्टर के माने कहते हैं इन्वेस्टर, लेकिन सुबह खरीदते शाम को बेचने लगते हैं, या तो पूछते भाई आज मार्केट क्या है, क्या खरीदूं क्या बेचूं। तो वो इन्वेस्टमेंट नहीं है, वो सट्टेबाजी है। तो आपको लंबी अवधि के लिए रखोगे 30, 40, 50 साल तक, और इंडेक्स में निवेश करो, म्यूचुअल फंड में निवेश करो, मुझे लग रहा है आपका जो धन है उसकी वृद्धि ज्यादा होगी। आप एक्सपर्ट हो मार्केट के ज्ञाता हो तो आपको अपने पैसे गंवाने का भी अधिकार है, आप ट्रेडिंग कर सकते हो, लेकिन ट्रेडिंग करने से ज्यादा समृद्धि नहीं आती, ऐसा मेरा मानना है। और जैसे आई हैव बीन अंपायर ऑल माय लाइफ फॉर स्टॉक मार्केट, तो मुझे ऐसा लगता है कि जो लोग ने पैसे एक्चुअली बनाए हैं उन लोगों ने कोई भी कंपनी में 5 साल 10 साल के नीचे पैसे नहीं बनाया, माने उनके लिए वो पेशेंस चाहिए, तो ही आपको कंपाउंडिंग का किक मिलता है। और कंपाउंडिंग जो है वो आपको लग रहा है कि हर साल 10% बढ़ता है, ऐसा नहीं है, वो वेव में आता है। जो स्टॉक मार्केट में जो रिटर्न्स आता है वो वेव्स में आता है। तो ऐसे भी होंगे 5 साल 10 साल कि जहां पे आपको रिटर्न्स ना मिले और सडनली एक साल में आपको 10 गुना रिटर्न मिल जाता है, 5 गुना रिटर्न मिल जाता है, तो आपको लग रहा है कि वही साल में मुझे जाना चाहिए था, उसके पहले मैं 7 साल रह गया और 8वें साल में निकल गया। तो आपको लंबी अवधि के लिए रहोगे तो जो उसमें वेव्स आते हैं उसमें भी आप पार्टिसिपेट कर पाते हो। जब आप तुरंत बाहर निकल जाते हो तो वेव्स में आप पार्टिसिपेट नहीं कर पाते हो। बहुत कम लोग लकी होते हैं जो स्टार्ट में जब अंदर बैठते हैं तभी उसके लिए पॉजिटिव वेव आ जाता है और ऊपर पहुंच जाते हैं, माने बहुत सारा धन बना लेते हैं। बट मुझे लग रहा है कि जो धन बनाते हैं वो ज्यादा धन गंवा भी जल्दी ही देते हैं, क्योंकि जब दूसरा ऑपोजिट वेव आता है मान नहीं पाते हैं। तो आई से कि मॉडर्न लाइफ इज बेसिकली अबाउट प्रिडिक्टिंग फ्यूचर, और उसके लिए जो रूल्स ऑफ थम्स वगैरह है ये गौतम वैद्य जी की किताब में बहुत अच्छी तरह से दिया हुआ है कि कैसे लॉन्ग टर्म में आप रहोगे तो आपका फायदा होगा। लेकिन ये जो लॉन्ग टर्म आप देखते हो 40-50 साल में क्या हुआ, one of the largest reasons in my opinion for this great bull run has been what I call fiat money without backing of gold. Many of you come from gold background. Earlier every currency pretty much had a gold backing. On 1971 15th August, India's Independence Day, Richard Nixon, American president, woke up on a different side of the bed and said on that day onwards, 15th August 1971 onwards, US will not replace gold back against the US dollars. After that, all the countries could start basically printing as much money they want because they did not have to give back the gold. And after that, there has been huge inflation because you start printing more money, every country prints more money, then it basically, that money chases the same assets. And that's why the prices of goods have gone up, commodities have gone up, which we use. But more importantly, the assets have gone up, gold, real estate, stock markets. And so large portion of what we call this great wealth creation has nothing to do with anyone's wisdom. It is something to do with the modern economic framework which has come about. And that is where every time there is a crisis, whether it is in savings and loan crisis, before that, the crisis related to oil prices in 1970s, in 1980s, savings and loan crisis, in 1990s, East Asian crisis, 2000, 2001, LTCM crisis, long-term capital management crisis, and of course the World Trade Center related crisis, and in 2009-10, that great financial crisis of the world. Everywhere the governments have done nothing. They've just printed more money. Nothing else had to be done. And of course the COVID crisis of 2020-21, huge amount of money has been printed. So what has happened is the outcome is that nobody has a risk now. Everyone who is buying assets, they are sure that if there might be temporary setbacks, but in 2-3 years time, all governments will print so much money that asset prices will come back, which means the wealth or value of the money comes down. The storage of wealth, money is one of the concepts, is storage of wealth, that goes down. And so I think I'm taking a lot of time, but basically what I'm telling you is in the long run, if the current modern sort of monetary framework comes about or stays long, if you stay in assets, you will be better off in the long run than not. And as and when you can predict the trend that the governments are squeezing. Currently, RBI has given an indication that they don't like the markets going up so much, or America is trying to squeeze itself because inflation is increasing. That time, you will see markets going down because the governments will take away the money. Otherwise, pretty much the negative interest rates across the world, or very close to zero interest rates across the world, is forcing the countries and economies and investors to go into asset classes which are more risky, like equities and derivatives and so on and so forth. So you need to understand that. Now, in some ways, what we think is wisdom may not be that much of wisdom, but just plain luck or plain policies of the governments across the world, or the modern monetary framework across the world. And I just wanted to be aware. And it can also happen in reverse. So it's not that life always goes up in exponential way. Life can also go down in exponential way, or in a compounded way. So China's one-child policy actually has taken them down, because at some point in time, till 2015, they were increasing people in the workforce. 2015 to 2016, first year was such that the number of people coming into the job market in China came down. And so slowly you will see the China's total production come down, although productivity may increase. Whereas India's sort of annual growth of population has also been reasonable. Just to give you a demographics, how the compounding has worked. In year 1900, India, Pakistan, Bangladesh, Burma, all of them were together. It was close to 25 crore population. Today, it has become close to 175 to 180 crore population. By adding only 1 or 2% extra every year, 25 crore in 120 years has now become 175 or 180 crore, right? Almost 9 times more. So be aware that in long term, things basically explode towards the end in compounding. And similarly, China is going down because of the same reverse compounding. So you need to be aware when those waves come, when this compounding kicks up on positive basis, compounding kicks up on the negative basis, whether it is actually compounding, which happens slowly, or it is non-linearity. That is, 1 becomes 10 at certain point, and then it remains at 10 or 15. It doesn't become 10 to 100, 100 to 1000, and so on and so forth. So that also you need to have understanding, wisdom, ability to capture trend, as Anilji said, and relative compounding. So our stuff may be going up, but American markets may be going up even more. So your relative compounding, you might be thinking I am becoming 3 times richer, but Americans are becoming 4 times richer. And so then again, you are becoming relatively poor. And so you need to be aware of that framework also. Last several years, American markets have given in dollar terms more returns than the Indian markets, and so on and so forth, right? So barring some pockets. So you need to be aware of that also. Corporates, I won't take much time on corporate some other time, how corporates have kind of grown into becoming all pervasive in last 7 to 800 years in all economic activities. And that has also been a compounded growth. But then the extinction of most of the species in the world, most of the animal or vegetable species in the world has also been basically compounded over the last 150 years, that almost 90% of all species have died because humans have expanded, and they have tried to keep only the useful species to them in terms of growth and so on and so forth. So that also need to be sort of captured. I mean, if you look back or look around your life, everywhere you will see these waves, everywhere you will see compounding, exponentiality, non-linearity, and so on and so forth. Start understanding life in that way. You will actually start having a life which is much more interesting than what currently you are observing. And last portion on the cryptos. The cryptos, in a way, they call cryptocurrency. Neither they are cryptos nor they are currencies, right? They are some sort of a what I call imaginary algorithmic numbers, where many people think they are able to find some sort of invest. But you can literally create infinite number of Bitcoins series, and you can call them doggy coins. You can call, today, as of now, we are talking around 10 to 20,000 cryptos are already available. And probably in next 20 years, you might have 20 lakh or 20 crore such different series available. And it's up to you. In childhood, I recall we used to play cards, exchange cards, and also spend money on those, buying those cards and films and all. Even matchboxes we used to exchange with each other. And that used to be our currency in our small little place. Now it has become very large across the world. It is used for many nefarious purposes also. But if you are trying to search for value, it may not be there. You need to find a new fool to buy from you. And there are many fools. So till the time the fools keep on buying from the last guy. I think the last guy is happier, the new fool. At the end, whoever's left holding the bucket or the baby will have to cry. But till that time, enjoy. So thank you.
Thank you, sir. Thank you very much for the elaborate answer. Really honored to listen to your views. Now we'll move on to Gautam. Gautam Baiji. मिलना तो दूर 3 महीने पहले मुझे आपका नाम भी पता नहीं, तो आपने इतनी अच्छी किताब लिखी है, इतना अच्छा काम किया है, तो अच्छे काम से ही नाम होता है. सो प्लीज कीप इट अप. और बस एक ही चीज मुझे बताइए, आप प्रेजेंटेशन कीजिए अपना, लेकिन आप कह रहे थे कि एक नई एडिशन है, रॉयल एडिशन, जो आज के जो विनर्स को हम लोग देने वाले हैं, उसके बारे में थोड़ा सा बताइए और आपका प्रेजेंटेशन शुरू कीजिए प्लीज.
So one of the common feedbacks from the readers of the original edition was that the font size was slightly smaller. So इस Royal Says edition में हमने height और width किताब की बढ़ा दी है. The content is exactly the same, just that it will be a much better reading experience. I've got a copy of the Royal edition with me. So this is the bigger size Royal edition, and this will be given to the 10 lucky winners today after our session.
Great.
All right, so I'll just begin my presentation, Anil ji. Please note that the views expressed in this presentation reflect my personal analysis and opinion and not that of my employer firm. The stocks discussed are for educational purpose only and not to be construed as investment advice. Please do your due diligence and consult your advisor before acting on this analysis. I'll be covering a range of topics today, including wealth creation through equities, the key learnings from my investing journey, and how value investing resembles a life discipline. In my book, I've talked about various aspects of compounding, including compounding positive thoughts, compounding good health, compounding good habits, compounding knowledge, compounding goodwill. Today, I will specifically talk about compounding wealth. The key to compounding is time and endurance. Morgan Housel has very aptly written, good investing isn't necessarily about earning the highest returns, because the highest returns tend to be one-off hits that kill your confidence when they end. It's about earning pretty good returns that you can stick with for a long period of time. That's when compounding runs wild. In a similar vein, Warren Buffett has said, and I quote, the first thing to realize is that it takes a long time. I started when I was 11. Accumulating money is a little like having a snowball going downhill. It's important to have a very long hill. I've had a 56-year hill. It's important to work in sticky snow, and you need a little snowball to start with, which I got from delivering the post actually. It's better if you're not in too much of a hurry and keep doing sound things. Now, what is it that prevents most investors from doing sound things in the stock market? It is this, the sharp interim downside volatility. Just look at this particular graph, which shows the maximum intra-year drawdown in the Indian stock markets represented by the Nifty 50 between 1991 to 2030. Over the last 30 years, we have had drawdowns ranging from 60%, 46%, 40%. And as recently as last year, we had a drawdown of 38%. Now, it is very important for financial advisors and investment advisors to educate their clients that downside volatility in the stock markets is a very routine affair, and it's as predictable as day following night and night following day. Trying to time the market and trying to hop in and out to eke out that extra bit of a return can be a costly affair. Howard Marks, in his memo to Oaktree clients in February 1993, wrote, the average annual return on equities from 1926 to 1987 was 9.44%. But if you had gone to cash and missed the best 50 of those 744 months, you would have missed all of the return. This tells me that attempts at market timing are a source of risk, not protection. Investors need to bear the periodic bouts of downside volatility as the price to be paid for earning superior returns from equities. Time in the market matters, not timing the market. The ability to keep investing at regular intervals, to stay the course through thick and thin, ups and downs, and bull markets and bear markets, and to not worry where the markets are going tomorrow or next week or next month is what matters. According to a study done by SageOne Investment Advisors, Even though the market index in India, the Sensex, went up 251 times between 1979 and 2017, if you missed 7% of the best months or just 1% of the best days, your returns would have been zero. So what is the big learning that we can take away from all this? It is to stay the course. Compounding is a lifelong journey, and an individual's impatience with his or her investment process could lead to a fatal decision and bring the journey to an abrupt end. Stay the course and remain faithful to your personal investment philosophy and your individual process. Focus is the key to success. Low and negative return years are a routine part of the investing game. You have to be present in this game for a long time to win. The key is to avoid getting thrown out midway because of reckless decisions. If we continue to earn above average returns over long periods of time and avoid permanent loss of capital in bear markets, the magic of long-term compounding ultimately will take care of the outcome. And what is this magic of long-term compounding that I'm referring to here? And how can it help us achieve financial independence? In his famous talk from November 2018, veteran Dalal Street investor Ramesh Damani talked about the incredible power of compounding. And in that talk, he referred to the rule of 72. According to the rule of 72, we double our capital every 3 years by compounding at 26%, 10 times in 10 years, and 100 times in 20 years. And along the way, we achieve financial independence. In the course of our daily lives, we treat a 2% charge as a small amount. In the world of investing, however, 2% is a huge deal. It has the potential to transform your life completely. To illustrate the huge impact a tiny 2% of savings in frictional costs can make over the long run, let's assume that you invest $30,000 today for 40 years in 3 separate fixed income instruments yielding 7%, 9%, and 11% respectively. This graph shows the ending value in each of the 3 cases. At 7%, you would end up with 0.4 million. At 9%, you would end up with 0.9 million. And at 11%, you would end up with 2 million. No wonder Benjamin Franklin said, beware of little expenses. A small leak will sink a great ship. And now it is the turn of equities, the greatest long-term wealth creating asset class. This graph shows what would happen if you invested the same $30,000 for 40 years in a portfolio of high quality stocks with 15% earnings growth and 2% dividend for a total of 17% return. In this case, you would end up with $16 million. This is compounding in action. And it just goes to show the incredible wealth creation potential of equities in the long run. And mind you, in our example, we assumed that you did not make even a single additional contribution after the initial investment. Just imagine how your compounding engine will skyrocket once you make regular contributions too. The final figure then becomes truly astonishing. The effects of compounding are too small to be noticed until they are too large to be ignored. Instead of treating dividends as free money and engaging in mental accounting, investors should resist instant gratification and always immediately reinvest their dividends. Reinvesting your dividends through a dividend reinvestment plan is a great way to take maximum advantage of the power of long-term compounding. A dividend reinvestment plan automatically uses your dividends to buy more shares of the holdings in your portfolio. You should enroll for the dividend reinvestment plan. You gain the benefit of dollar cost averaging, and after enough years go by, the benefits accrue in the form of higher dividends. That may be a multiple of the original investment. This is the power of compound interest. In addition to earning returns on the money you invest, you also earn returns on those returns over time. This compound growth is what causes your wealth to snowball over time. The way to wealth is to buy right and hold on. By doing so, an investor minimizes paperwork, transaction costs, and capital gains taxes. To reap genuine riches, one needs to invest in long-term winners and hold on for compounded tax-free growth. No more effective tax haven exists than unrealized appreciation in a long-lived, soundly growing company. Compounding, combined with patience, is an incredible force over time. This table shows the top 25 fastest wealth creators over the last 25 years from 1995 to 2020, as per Motilal Oswal's 25th annual wealth creation study. And you can notice here that over the long term, the stock price performance closely mirrors the earnings growth. In the short term, the market is a voting machine and is driven by herd behavior. But over the long run, the market is a weighing machine and it weighs earnings. And this is what the past history tells us. Here's a good example of a company which has created a lot of wealth for its investors in the last 1 year, the Bombay Stock Exchange. And this is a good example of how capital allocation actually adds value. So many investors have been pleased with BSE Limited's 95% dividend payout, its new initiatives like the Star MF platform, which provides the technological backend for asset management companies in India, the Gift City initiatives. And over the last 1 year, you can already see how much wealth Bombay Stock Exchange has created for its shareholders. Since we have many representatives from the jewelry community in India today, I just wanted to share a few case studies of Berkshire Hathaway's investment in Borsheim's and Hurlsberg diamonds. Over many decades, Borsheim's has established a reputation for selling quality jewelry at remarkably low prices. The majority stake was bought by Berkshire in 1989. The costs were kept to a minimum by only operating from one store, buying in volume and often with cash, thereby getting discounts and passing on the low cost to customers. This in turn led to very high volumes for a one-store business, which fed back into the cycle of low operating costs plus low unit buying costs. Borsheim's low prices and costs, buying power and large range attract customers from far and wide, which enable high volume, which in turn lead to low prices and costs, greater buying power and range. So this is a great example of what veteran investor Nick Sleep calls shared economies shared. Another good example is Hurlsberg Diamonds, which is one of USA's largest jewelry retailers with a chain of 200 stores nationwide. The retail chain was operated by descendants of founder Morris Hurlsberg until 1995, when it was sold to Berkshire. After the owner of Hurlsberg Diamonds sent Warren Buffett the financial statements in the spring of 1994, a few things struck him. Notably, Hurlsberg sales had grown more than 5 times from 1974 to 1984, and they had grown a further 5 times to 282 million by 1994. The company exhibited remarkable productivity per store, turning over an average of around $2 million per store was far superior to competitors operating similar size stores. The high sales per square foot contributed greatly to the key element which Warren Buffett always looks for: good returns on invested capital. Most of the time, companies which demonstrate very high returns on invested capital enjoy some kind of a competitive advantage, or what Warren Buffett refers to as moats. We in the investor community have often heard about the traditional sources of competitive advantages, like brands with pricing power, having high switching costs, enjoying network effects, or having access to a collection of patents, or enjoying a monopoly by way of regulatory fiat. But one of the lesser discussed sources of competitive advantage, and one which is, in my view, one of the most durable sources of competitive advantage, is trust. We build trust by being honest in our communications, by being authentic and sincere in both words and actions, by being transparent and admitting mistakes and sharing what we learn, by being reliable and fair in our dealings with others. And in India, the epitome of trust is Titan. Just look at the amount of wealth creation by this company since 1995. It has gone up more than 30,000%, including dividends, which means if you had invested 1 lakh rupees in 1995, you would have more than 3 crore rupees by the end of 2020. Traditionally, the earlier generations used to depend on the local jewelers for their jewelry needs, but the new age millennials and the new age generation, they are looking for a brand which they can trust. And that is what Titan signifies. And this is how a company which displays trust in its daily dealings creates value for not only its shareholders, but the entire community. At this stage, I would like to invite views from the panelists, and I would request Anilji to take over the discussion.
Yeah, thank you, Gautam. Awesome. So let's carry forward the discussion. So I would again invite CKV to comment on 2 things. Gautam has spoken about the competitive advantage. So one competitive advantage, to my knowledge, is the fact that the advertising, the communication aspect. Titan has always communicated its values, and its campaigns have been progressive, effective, and at times times very provocative. So do you agree that advertising is one of the competitive advantages? That is one aspect. And then we will want him to initiate a discussion on trust. Because there is a question from A. Shivram, who has worked with Tanishq earlier. And he wants to know from you, today trust is the foundation at all businesses, but more so for the jewelry business. So if I have to give you a concrete example, globally trust is very important. So Gautam spoke about Borsheims, and Warren believes in investing in those business which he has some knowledge of. So he had said about Borsheims, the jewelry. If you don't know jewelry, know your jeweler. So trust is very important. But what do we see today? The trust factor has been eroding. So I want to know, initiate the discussion on how do we increase the consumer confidence, thereby trust. What can Titan do and advise the industry to do? And what can Titan do to work with the gem and jewelry industry so that everybody benefits? Please start, sir. Thank you.
Thank you, Anil. On the first part of it, very much right from 1987, advertising has been a big competitive advantage for Titan brands. I was in the watches business for 50% of my 31 years and in the jewelry business for the other 50. And in every situation, you know, the advertising was a big part of building the competitive advantage. It started with understanding what consumers are really looking for, and to some extent staying a little ahead of the aspirations of consumers, as opposed to, in a way, merely satisfying the aspirations of the consumers. For example, if I were to take, you know, we did a television commercial in Tanishq about 10 years back, 7 years back, around the idea of second marriage and how a second marriage is actually perfectly fine in this world of ours. And that was, you know, based on an insight on the matter and the manner in which the advertising film was finally created, and how jewelry was also integral to that advertising. And it was built on a growing acceptance of a second marriage by everyone concerned, was a big part of why it became very, very popular. So I'll keep that answer sort of tight on that first point and go back to the larger question that is about you know, trust. And right from the beginning, because we were from the Tata Group, you know, the Titan brand was born with that trust. And in jewelry industry, even more so in 1996, when Tanishq was launched, it was on the back of Tata's. And even today, even 25 years after the launch of Tanishq, when I meet customers and ask them, why do you buy Tanishq? The first answer is Tata's. And this answer is rooted in multiple things. One is, of course, the purity of Tanishq, and therefore when I'm buying Tanishq, I'm getting 22 karat pure or 24 karat pure. So that's one part of it. The second part of it is that even after 10 years, after 25 years, after 100 years, the Tata Group will be there. And therefore, if I were to go back to get my money back on the jewelry that I bought in 2021, in 2071, if my grandchildren were to go back to the Tatas will be there, and they will give back the money that they promised 50 years back. So that's the second part of the trust. The third part of it is that the Tatas and the Titan company are not there only for making money. They are investing in karigars and making a better place. They're investing in COVID and related things and giving back to the community. You're aware that the Tata Group is perhaps the only group in the whole world, or at least one of the very few groups, which are ultimately owned by trusts, and the dividend income that Tata Sons gets goes back to the trust, and 2/3 of that dividend income goes to trust, which comes back to the country through everything that the group does, the trusts do through their development efforts. Therefore, the authenticity of the Tata Group in multiple aspects, which is even more growing, these days, is very much a critical part of the competitive advantage. So I would pause here, Anil.
Thank you, sir. Thank you. So we have a very limited time at our disposal because Gautam is going to share his investment journey, but not before we request Ashish Chauhan. Sir, carrying forward this trust discussion, there are questions from the audience about the role of the rating agencies. You find that a certain issue gets a good rating, you buy that stock, and then the shareholder value is eroded. And this question is from Deepak Tulsian. So I'm clubbing two questions together. And another question is from Rohit Jain. What is the credibility of a financial advisor? Sir, just to give you my example, I have not found a credible advisor in my financial journey for the last 10 years. So over to you. We are eager to hear your views.
Thank you. I think both are interesting questions, and because the way I look at it is, unlike most other advisors like doctors or what I call professors, the financial related advisors like credit rating agencies, they are trying to predict the future, and future is uncertain. Physics laws are not uncertain. Even biochemical processes in the body usually are known. On that basis, you get the medicines, except in COVID, where people are still trying to figure out. But effectively, credit rating agencies are trying to figure out the future, and they are not gods. And they actually say that when I'm giving credit rating for a company, credit rating for the company is about receiving the money back in case you lend them the money, not invested as a partner. See, many times we mix up the partnership versus lending part of it. So usually the credit rating agencies give you the rating related to the company's debt, whether it is commercial paper, short term or long term and stuff. And that's why it is their opinion. And they also know that they can, it doesn't have to be correct. In fact, in 2009 financial crisis across the world, all the credit rating agencies failed miserably by margin of like 100 times. And so the entire credibility of credit rating industry has gone down. But the question seems to be that if credit rating agency gives the rating for the company's equity, what do we believe in? I don't think now they give. Earlier, SEBI had made it mandatory for credit rating agencies to give their opinions on the company's stock prices also when the IPO comes. But that has been stopped because it was proved beyond doubt that whatever credit rating agencies have given as rating was wrong. So that's why SEBI actually stopped it. But idea is don't believe in anyone, including me or Warren Buffett, blindly. Suno sabki karo apni. In English, it means listen to everyone, including credit rating agency, but money is yours. So invest money wisely. Don't think that the credit rating agency's advice or opinion will not go wrong. So be aware, be very, very careful on any opinion you take for granted. And that is true for the financial advisors also. There are good financial advisors, there are bad financial advisors. There are good financial advisors who sometimes may not suit your type of needs or may not get you that great results you want. And each human nature is such that if you get 10 times returns, you want 20 times returns. And if you get 20 times returns, you want 200 times returns. So we are not satisfied with anything. And I'm telling you, don't be satisfied. But that doesn't mean you don't take advice, right? Like many of us are trying to do self-medication in Google Times. Whenever we get a headache or whatever, we try to search for Google and try to take, because all doctors are bad, everyone is bad. So I need to take myself. I think there is a value to advice, but still, if you don't like one advisor, try to take advice from 2-3 people and try to see what is happening. So my request is, there is a value to credit rating agencies rating that comes, but don't take it blindly. There is a value to advisors' advice, but don't take it blindly. Have 2-3 more opinions and so on and so forth, right? So that's broadly sum and substance of what I wanted to say.
Thank you very much. And Gautam, sorry to be a pest, but we have only 20 minutes with us. So start your financial investment journey but you have to do it in a fast forward mode. Otherwise, we will not be able to do justice to two things which we have planned in the agenda. So please start right away.
Sure. So over the last 14 years, there have been many learnings in the course of my investing journey, and I would like to share the key ones with all of you today. Traditionally, there have been three sources of edge for the individual investor. The first one being the information edge, but with the rise of the internet and widespread information dissemination, that edge has virtually disappeared. The second source of edge has been the analytical edge, but with more and more smarter people entering the investing field, that particular edge has also gotten compressed. The third source of edge for the individual investor is the one which in my view is the most durable and long lasting, because human nature has not really changed much in centuries, and that is the behavioral edge. Over the years, I've come to appreciate the fact that investing is a field of simplifications and approximations rather than of extreme precision and quantitative wizardry. I also have realized that investing is less a field of finance and more a field of human behavior. The key to investing success is not how much you know, but how you behave. Your behavior will matter far more than your fees, your asset allocation, or your analytical abilities. Even low-cost index funds won't be able to help you if you succumb to behavioral biases. Most of the time, the real risk is not in the markets, but in our behavior. And emotional intelligence has a much bigger impact on the success or failure of investors than the college they attended or the complexity of their investment strategy. Most of the time, their high intellect works against them because they become so sure of themselves and their abilities that they cannot change their mind. It is always a struggle to keep things simple in a complex world. And that struggle is more pronounced for the highly educated people, because the smarter you are, the better you are at constructing a narrative that supports your personal beliefs, rationalizing and framing the data to fit your argument or point of view. You may be smart, but not necessarily intelligent, because intelligence is the ability to arrive at accurate cause and effect descriptions of reality. The second big learning over the years has been the importance of prudent and sensible behavior. Concentration coupled with intelligent risk taking and good luck creates big wealth. Diversification coupled with humility and contentment preserves big wealth. Once you have achieved financial independence, it is important to realign your portfolio to have the majority weight in high quality businesses. After reaching a state of financial prosperity in life, ensure that you take all necessary steps to avoid being thrown back to the starting position. Achieving success and then losing everything has a far greater emotional impact than failing before ever having achieved success. The key to a lifetime of investment success is not to make brilliant or complex decisions, but to avoid doing foolish things. The next big learning over the years has been the importance of having a flexible and open mind. All the great investors believe in the dictum, strong beliefs loosely held. The day I began being patient with holding my winner stocks and impatient with the non-performing businesses and managements, my wealth creation journey gained major momentum. Portfolio turnover, when justified by facts, it's not a sign of weakness. It is a sign of constant learning. I acknowledge that even after many years of investing experience, I still make mistakes of commission many times when adding new stocks to my portfolio. But the biggest improvement is that now I get rid of these mistakes very early instead of hoping and incurring expensive opportunity costs. Most investors wait to recover what's gone rather than retaining what's left. They don't realize that loss recovery does not necessarily have to be made from the same stock on which the loss was made. If the story has gone wrong, simply book your losses and move on to a better opportunity. Continuity of compounding is the key to success in this long-term game. And after buying a stock, forget what you paid for it, or this knowledge will forever affect your judgment. You need to materially adapt when losing and remain faithful when winning. If you have the discipline to do just these two things, you will succeed as an investor. The next big learning over the years has been to identify companies with the capacity to suffer. Noted value investor Thomas Russo has coined the term the capacity to suffer, referring to companies that are reinvesting to build long-term competitive advantage at the cost of short-term depressed earnings. I've talked about the same in my book in the chapter on delayed gratification, and I quote, Investors generally overlook businesses that are doing things that will create significant incremental earnings 1 to 2 years from now because they don't want to wait that far out. Investors often shun businesses that are investing for the future and currently are suffering from low initial margins in those new initiatives because capacity gets utilized only over time and the earnings growth is back-ended. Even if they execute well, they will see little reported earnings growth for the next 4 to 8 quarters and may even see a decline resulting from incremental depreciation and poor initial margins because of low capacity utilization. And even if they are expected to experience an exponential jump in earnings growth after that, the stock markets generally do not initially increase the market value of these businesses. They do re-rate them, however, around the time when the earnings growth is clearly visible. As investors, we get an edge over competition if we pick these companies and have the patience and conviction to hold them. Although these businesses are clearly undervalued on a longer term basis, it is psychologically challenging to invest in them and even more so to hold on to them. These difficulties result in a lack of investors and the subsequent mispricing of those stocks because the price discovery is weak when investors' attention on these stocks is low. Earlier this year, I tweeted about one of the portfolio holdings in my shared in my book, Rajratan Global, which reported very strong third quarter earnings. Revenues were up 52%. There was a big margin expansion and net profits went up almost 100%. And this is the way deep value investors get multi-baggers in the stock market by investing in companies which are undergoing large capacity expansions during an industry downturn. And then you simply ride these capex plays through the full industry cycle, downturn to upturn, and exit in a timely manner to reap maximum capital appreciation. So this is the last 2 years stock price chart of Rajratan Global. As you can see, while they were undergoing capacity expansion, investors' interest in the stock was basically negligible. But as soon as the earnings visibility picked up last year, the stock basically has quadrupled since then, from 250 to more than 1,000 rupees. Now note what I just said a couple of slides ago, that the stock markets generally do not initially increase the market value of these businesses. They do re-rate them, however, around the time when the earnings growth is clearly visible. Earlier this year, on 8th of January, a company in India called Ultramarine and Pigments announced the commencement of their commercial production of their new capacity. And I had mentioned that big capacity expansion plus low valuation plus earnings growth plus margin expansion should now lead to P re-rating, because the newly expanded capacity was in the more higher margin surfactants business. And since 8th of January, from here, Ultramarine gave very, very good returns. But the delightful part about Mr. Market is that he's a very accommodating fellow. He keeps giving value investors the opportunities to keep buying good businesses, promising opportunities, and by basically making very sharp dips happen. So just a few days ago, Ultramarine and Pigments reported a weak quarter, and Mr. Market took off more than 1/5 of the market cap of this company in just a few days. Now just think, has the long-term intrinsic value of a business declined by more than 20% in a few days on the back of just one quarterly blip? No, right? But that is the most exciting part about the market, that if you know what you own and if you understand the business, the markets keep giving you opportunities again and again from time to time. The next big learning over the years has been that investing is all about the rate of change. Warren Buffett has said that a business should be viewed as an unfolding movie, not as a still photograph. In investing, always focus on delta, that is on the rate of change in earnings growth and its underlying quality. I'll illustrate that with the help of this example of a company from India, and it's a century-old company, by the way. This company was established in 1919. Until 2005, they were in the fertilizer business, which was a regulated business and which was subsequently shut down. And from 2005 to 2011, the company shifted its focus to producing low margin bulk chemicals. And from 2011 till present day, the company has further shifted its focus to the higher margin specialty chemicals business. In its latest FY 2020 annual report, the company has mentioned that they are now going to focus only on chemicals where they envisage an operating margin of 30% and a payback period of no more than 3 years. And to expand their capacity in the specialty chemical segment, the company has planned a capital expenditure at the available land parcel in Dahej, Gujarat, India. I'll reveal the name of the company shortly, but I would like to share one additional data point that on 10th February earlier this year, this company came out with an investor presentation on the Bombay Stock Exchange website, laying out the full details of their capital expenditure program. And as I just mentioned a few slides ago, that the stock markets generally do not initially increase the market value of these businesses. They do re-rate them, however, around the time when the earnings growth is clearly visible. Investing is all about pattern recognition, and the same patterns keep repeating again and again. The name of this company is Dharamsi Morarji Chemicals, and ever since the announcement of that detailed capital expenditure plan, the stock has gone up more than 50%. I would now like to talk about how value investing is actually not just about stocks and business fundamentals. It is a life discipline. And over the years, I've come to realize that the best things to learn from Warren Buffett have got nothing to do with investing at all, actually. If there is one big thing that has benefited me immensely in my investing, trading, and wealth creation journey over the years, it is this: listening very attentively to and learning from peers, seniors, and juniors who are much more smarter and hardworking than me. One should always be humble. The more you reach out to and associate with individuals, whether younger or older, who are better and smarter than you are, the more you will learn and the faster you will improve. It is better to be an average guy on a star team than a star on an average team. The former will be better for you in the long run. The latter is just an ego trip. If you are the smartest person in the room, you are in the wrong room. It is wiser to be with better people and to be uncomfortable than to limit yourself to a mediocre circle just to feel comfortable. The people closest to you play an outsized role in your level of success or failure, so choose wisely. You are, after all, the average of the 5 people you associate with the most in your life. And the great thing about being an investor in today's times is that there are so many bright and hardworking investors and traders on Twitter, WhatsApp groups, and Telegram channels. All I need to do is listen attentively to what they are sharing and then sincerely do the required study at my end. There has never been a better time to be a humble and grounded person. Ralph Waldo Emerson had said, "Every man I meet is my master in some point, and in that I learn of him." Learning and accepting help from others creates value far beyond our individual capabilities. Look at every interaction as an opportunity to learn from the people you meet. You would be amazed at how quickly you grow and how much better you become, both as a professional and, more important, as a human being. A tree that wants to touch the sky must extend its roots into the earth. The more it wants to rise upward, the more it has to grow downward. Similarly, to rise in life, we need to be down to earth and humble. The value investing discipline has certain finer aspects that we come to realize and appreciate only with the passage of time and with experience. With the passage of time, we learn to recognize that value investing is not merely about stocks and business fundamentals. It is a life discipline. And I've illustrated the same in my book through a section on overrated and underrated behaviors, which I would like to share with all of you. Knowledge is overrated. Wisdom is underrated. Intellect is overrated. Temperament is underrated. Outcome is overrated. Process is underrated. Short-term outperformance is overrated. Long-term adherence to one's investment philosophy is underrated. Gross return is overrated. Stress-adjusted return is underrated. Upside potential is overrated. Downside protection is underrated. Minimization of return is overrated. Avoidance of ruin is underrated. Growth is overrated. Longevity is underrated. Entry multiple is overrated. Exit multiple is underrated. Price to earnings ratio is overrated. Duration of competitive advantage period is underrated. Categorization of stocks into large cap, mid cap, and small cap is overrated. Categorization of businesses into great, good, and gruesome is underrated. Being more frequently right than others is overrated. Being less wrong than others is underrated. Forecasting is overrated. Preparation is underrated. Confidence is overrated. Humility is underrated. Conviction is overrated. Pragmatism is underrated. Analytical ability is overrated. Personal behavior is underrated. Having a high income level is overrated, and cultivating a disciplined saving habit is underrated. Competition with peers is overrated. Helping them is underrated. Large personal net worth is overrated. Good karma is underrated. Talent is overrated. Resilience is underrated. Being the best investor is overrated. Being the most authentic version of yourself is underrated. I would like to conclude my talk with two key messages and two big learnings from my book, that the goals of investment should be happiness, joy, growth, intellectual satisfaction, and eventually peace and serenity. Wealth and financial prosperity are natural byproducts of lifelong learning. And many people achieve success, but to sustain the same and potentially build on it over an entire lifetime requires humility, gratitude, and a constant learning mindset. For any feedback or queries, feel free to connect with me on thejoysofcompounding.com. I can also be reached on LinkedIn and Twitter, and readers can get their copy of the book on Amazon, Google Play Books, and Book Depository website. With that, I come to the end of my presentation, Anilji.
Thank you so much. So we have many questions, but Venkat sir has a commitment at 11:30. So I will ask a question to him, and then we will continue with the rest of the things on the agenda. So Venkat sir, Akshay Anthony, one of our viewers, wants to know what factors does Titan take into consideration before entering a new product category, and how does it allocate capital? Please begin, sir.
Thank you, Anil. There are 4 or 5 considerations which we typically bring in. One is that typically, we have entered into categories which are not yet well organized. And therefore, the early entry or the first entry of a corporation like us can give us a competitive advantage, to hit the ground running. And so the extent of organized nature of that category is one important criterion. The second is the role of branding and design. And the third is the presence of, the extent of strong competitive players already entrenched in the business, and so on. So these three typically, characterize the categories that we enter. And because of our very high capabilities in some areas like consumer insights, design, manufacturing and sourcing, franchising and retailing, branding and marketing, we are able to create a customer value proposition as well as a business model that is quite deep. And we've also been fortunate in some situations where other potential entrants into these categories have left us to flourish. Like you mentioned that many years back, there was a lot of doubt about Titan making it successful in the jewelry industry. Even the group, Titan Company itself, was a little worried about our entry. But we finally succeeded. But I think in about 10 years from then, from 2000 to 2010, even other potential entrants into this category perhaps had the same view about Titan and Titan's success in the jewelry industry and did not enter. And that gave us a long enough rope for us to work on the key capabilities that were needed to make success in this industry. And by the time the next big company entered in, we were way ahead in the game, and therefore forever others were left to catch up.
Thank you, sir. Thank you. So now it is my pleasure to invite Sri Ashish Pethe for his comments, and you can ask the first questions, and later on there are many questions. We'll try and take as many of them as possible, but I would like to hear your views, and if you have any questions, please start.
Thank you, Anilji, and thank you to all the panelists for a wonderful session and wonderful insights into wealth creation and the compounding, as it was said. I have a question to Mr. Bai. could you explain the emotional intelligence part that you explained? It was a little difficult for most to understand. If you can elaborate a little, that will be great, and we'll be, enriched by your understanding. Thanks.
So that was the key message from that slide, that for successful investing, what matters is not the raw intelligence but the emotional intelligence which you possess. It's very important to have a higher emotional IQ than just a raw IQ, because the smarter you are, the more you will be able to justify your own narrative and point of view. But the successful investors are always active seekers of truth. So if you want to be a successful investor, you have to engage constantly in what is known as truth seeking. And that requires a very uncomfortable state of mind, which is known as constantly searching for disconfirming evidence. Most investors suffer from a bias called endowment bias. Once they basically feel that what they own is far superior to what other investors own. But the really good investors are always on the search for destroying their best ideas all the time. So they are always in the process of seeking out potential sources of downside risk. So that is where emotional intelligence plays a big role. One has to be intellectually honest with themselves and see reality for what it is, not what they wish for it to be or hope for it to be or want it to be. That is what emotional intelligence basically means.
Great, thanks.
Uh,
And
Ashishji,
one more thing I loved is when you said that the time in the market matters rather than timing. That blew my mind. Thanks.
Thank you.
So Ashishji, with your kind permission, which I am taking for granted, we will have to extend by 10 minutes because we have to do justice. We are at the end of the session, but please allow us 10 more minutes.
Okay.
So, yeah, thank you very much. And now we will take the first question from Malhar Manik. He's a young guy, he's all of 14, and he has read almost all books that are available on investing. And he has questions for both of you, Gautamji and Ashishji. So, Malhar, if you are around, please.
Yes, sir, absolutely. Yeah, thank you for this opportunity. Sir, my question is that Sir Charlie Munger talks about worldly wisdom and multidisciplinary reading. So I want to hear if there are any examples you could share where you have connected the dots between multidisciplinary subjects like, say, history or biology or physics and business and investing.
Fantastic question. So before they answer your question, I wish you all the very best. And you told me the other day that you started your investment journey at the age of 13. You are not too far behind because Warren Buffett started his journey at 11. So beta, all the very best. And just don't be after money. You be wealthy, but be a good man as Warren Buffett. So all the best. Now I invite your views, Ashish as well as Gautam, please. Multidisciplinary approach to learning. Thank you. You can now unmute. Malhar, you can unmute.
Gautam.
Oh, sure. First of all, thank you, Malhar, for the question. It is a pleasure to talk to you, and I wish you all the very best. Let me share a personal experience with you. I've experienced multiple severe drawdowns in my personal portfolio in 2013, 2015, 16, 18, 19, and March 2020. But all throughout these years, I was able to maintain a firm conviction in equities as an asset class because I had a sound knowledge of history, which is a great asset to have for an investor. So Bob Rodrigues, who is the managing partner and CEO at First Pacific Advisors, he had met Charlie Munger at the USC school graduate investment business class. And he asked Charlie Munger a question that if I could do just one thing to make myself a better investor, what would it be? And Charlie Munger replied, read history, read history, read history. And to explain why Charlie Munger said that, I'm going to share two important aspects of investing. One is the irrelevance of politics for long-term investing. And number two, the long-term wealth creation track record of equities as an asset class. So let me talk about the politics part first, using an example from the US. In 1901, Theodore Roosevelt, a Republican, took oath as the President of the United States of America. Fast forward a few decades later to 1945, when we had Franklin D. Roosevelt, a Democrat, in charge of the Oval Office. Between these 44 years, from 1901 to 1945, Republicans held office for 24 years and Democrats held office for 20 years. And during this period, America experienced a variety of economic adversities, including 8 economic recessions, the Great Depression, the financial panic of 1907, and 2 long-drawn brutal world wars. Despite these massive headwinds, America's gross domestic product, GDP, grew from 21 billion in 1901 to 228 billion by 1945, an 11-fold increase in 44 years. America continued to march ahead, whether it was being led by the red or by the blue. The post-World War era has seen a similar balance as the political pendulum continues to shift back and forth. From 1945 to 2020, during a period of the 76 years, Republicans have held office for 40 years and Democrats have held office in Washington for 36 years. And during this particular phase, America's GDP has grown from 0.2 trillion to nearly $21 trillion at the end of 2020, an astonishing 105-fold increase in GDP. So America's economic progress has always been on, irrespective of whether, and it will continue in the future, irrespective of whether Republicans hold control in Washington or Democrats do. Owning a piece of this great system via a collection of high quality businesses for the long term is a winner's game. Former Singapore Prime Minister and the nation's founding father, Lee Kuan Yew, very aptly said that if you do not know history, you think short term. But if you know history, you think medium and long term. Whenever you are confronted with doubt, despair, or fear in the media about any ongoing crisis, just focus on the big picture, which is the one that is worth thinking about if you expect to maintain a firm conviction in equities for the long term. The big picture is this. For more than 200 years, 2 centuries, equities have rewarded their owners with real returns of more than 6.5% per year on average, far greater than all the other asset classes, including treasury bonds, treasury bills, gold, and the US dollar. So basically, history tells us that equities have delivered the highest long-term real return and that their predominance over all the other asset classes is simply overwhelming. So acting on this little bit of information will be far more lucrative in the long run than reacting to the opinions and suggestions of the market commentators and economists who keep predicting the coming depression or the next big market crash. This is how, basically having a sound knowledge of history helps you become a better investor.
Thank you, Gautam. Ashish bhai, your take. You have the last word.
No, I think it's a multidisciplinary means a lot, including history. And that also is about anticipating future. Currently, if you look back, the entire, literally the entire human history has been about technology. And technology, if it comes newly, it changes life and it creates new wealth. And 700 years before today, the Industrial Revolution started, and that changed basically the world. The information revolution is just starting in front of us, and this innovations, the technological changes come in waves. The thing which you need to learn, in fact, in yesterday, one of my interviews, longish interview yesterday, it's there on my Twitter or Facebook. It's basically what I said is that the waves are becoming so fast that what happened in last 300-400 years is going to happen in next 30-40 years. So you may learn from 300 years of history in different areas, and then you'll have to anticipate into different areas for next 30-40 years to figure out what wealth to create, what wealth will be created. Some of them you will of course miss out. Some of them, if you're successful or lucky, you will be able to do well. Just to add to the history point, because America is a great survivor nation in last 120 years. Gautam talked about 1900 to 2021, right? But in 1900, if you were a European investor or an Indian investor wanting to invest on the western side of the world, what would your investment advisors advise you? Invest in Argentina, not in America. So what is in vogue doesn't mean what is becoming famous, what is becoming cryptocurrency may not be that great after 20 years or 100 years. So today, you know where Argentina is, where America is. In 120 years, you can see the differential because they took a different path and a consistent different path. And so you need to understand. Similarly, even 30 years back, if you looked at Venezuela, Venezuela used to be a great country with great oil assets, and they ended up giving money free to every citizen, which is what Saudi has done in a different way. The kings have kept more money with them, but they also distributed money. That has happened in Gulf. And today, you know where Venezuela is. It's a basically indebted nation. People don't know what to work because they were getting free money and stuff like that. So be aware, history has many lessons, and we will continue to learn what I call wrong lessons most of the time. But if you are able to learn right lessons and then predict to the future. See, learning history, there are many professors who will teach you history, but they don't make money, right? So you'll have to understand that knowing history is only as much important as basically using it for predicting future, creating your hypothesis, investing a little, and so on and so forth. And that's what my request would be.
Thank you so much. Now there is a pleasant task of announcing the lucky winners, but I request all of you to stay back, because after I announce the winners, there is going to be a short prayer, less than a minute, and if possible, fold your hands and keep your eyes closed. So now let me announce the winners. Monica Khurana is one. Then Malhar Manek, whom we just spoke to. Shashikant Mule, Santosh Kumar, Vipul Sanghvi, Mir Muazzam Ali, he's from Hyderabad. Then we have got such a wonderful question, but we are not able to take it. It is from Vinay Mishra, Bandara, a small town near Nagpur. Then we have a question from Naman Kabra. You know where is he is based at Nimba Hera in Rajasthan. I have been consider myself well traveled because basically I'm a salesman. But for the first time I heard the name Nimba Hera. So congratulations. Then we have Prashant Kamani from Kolkata and Dushyant Dave from Mumbai. So thank you very much. And I would now request Anup to play the video and let's pray. You have been a lovely audience. Anup.
Asato ma sadgamaya tamaso ma jyotirgamaya mrityorma amritam gamaya sarvesham swastir bhavatu sarvesham shantir bhavatu Sarvesham Purnam Bhavatu Sarvesham Mangalam Bhavatu Loka Samasta Sukhino Bhavantu Om Shanti Shanti Shanti